So my thoughts on that are that I think it's going to be very volatile in terms of if you're looking at it from Bitcoin's fiat price. I think it's going to be very volatile forever, forever. Like I don't think that changes, at least in our lifetime, anyways. But kind of my theory on this is that once Bitcoin gets to $1 million, we start measuring it in sats. So it'll be like 1 cent per sat, and we can't really do that until it gets to $1 million. And so when you see sats being priced, I think that honestly will bring a whole new crop of people in there, because that's what I think one of the biggest things that holds people back is the unit bias. They think that Bitcoin's too expensive, even at $60,000, because they feel the need to own one whole thing of something, right? They don't know that sats exist. But I think once it gets to $1 million, we won't be pricing it at $1 million. It'll be way too big for a ticker. How many tickers have $1 million item on it, right? So it gets repriced. It gets reframed into sats. And so I think that when it moves from 1 cent per sat to 2 cents per sat, Bitcoin in the background moved from 1 million to 2 million. So like that's massive. If we consider the fact that we just dropped like 40,000, everybody's losing their mind. One sat, 1 cent per 1 sat, 2 cents per 1 sat. That's $1 million swing in the background, and people don't even know that. I just think that we won't even know what the price of Bitcoin is in a decade from now because of that, because we'll be looking at it through a different frame of reference. That's my theory on it.
Yeah.
I don't know. I think it's really interesting if we as an asset, or like Bitcoin as an asset, gets from the one side, from a TradFi pros, and saying like, oh, it's so volatile, like it goes up and down 40%, like I cannot handle that, it's too much. But then we get on the other side, like the young 18-year-old traders that say, hey, I want to make a 1,000x in like the weekend, and both of them kind of like spit on us and say like, you're not volatile enough, you're not high return enough, and the other one is saying you're too volatile, you're too high return, like I don't want to have that asset. If we're sitting in the middle of that, we're sitting in a very interesting position, because we attract both pools. We attract both pools that do want to have the high volatility, the traders, the gamblers that want to go 40x short, 40x long, and like go on a Sunday, go on a Monday, like do all that crazy things. But then we also slowly attract the crowd that says like, hey, it's like an interesting asset over the long run. Now we have that weird in between where we don't belong anywhere. And so it's like, are we a tech stock? Are we a commodity? Are we gold? Like we don't really, like Bitcoin creates right now its own small asset class, its own small, like what it actually is. And we talk about that since I started listening to Bitcoin content 6 years ago. We always talked about the decoupling, and like we are getting away from other assets. So far, I don't know if it really has happened. I don't think it's long enough that we can say it's actually decoupled. But I think that's what we will see in the long run, where people on the one hand say, hey, it's not volatile enough, I cannot trade on it enough, it's not going up like 10x tomorrow. Yeah, and the other side is saying like, oh, it's like it goes down 40%, 50% in like 5 months. That's like, then I cannot use this because I cannot gamble my net worth on that. And I'm actually curious what you guys think on that, because I think there's like two characters. There's the character that actually can handle volatility, they can handle those things and has this long-term horizon, and they will just like buy Bitcoin and they are great with that. They have in the next 20 years like a 30%, 25% CAGR, or whatever the number will be. And they will stomach the volatility, and they will make a killing out of it. And I made that calculation. If you go over the next 10 years and you have an asset that has a 10% CAGR every year, and you put 100K in there, you end up with like 260,000. So you make in 10 years from 100K to like 260K. If you go up to 40% CAGR, which is quite some bit, but people don't realize how much of a bit it is. You get from the 100K, not 260K, you get almost 3 million. Wow. And so sacrificing the short-term volatility does make a lot of sense for the long run, because you get you kind of pay for the huge upswing with the short-term volatility. And so I think there is this one character that is fine with the volatility, with the long-term kind of payoff. And then there's the other character that just wants to have like the 5%, 7%, 10% return in their S&P 500 ETF kind of product. And maybe Stretch can like capture that upside, and maybe that can then in that way flow into Bitcoin, and there will be a lot more stretches and a lot more things that can increase the adoption for that kind of character. And I have that weird feeling like 90+% are unfortunately in that category. And most of the real Bitcoiners, the long-term visionaries, they are, I think if we are 5%, I think it's almost too much.
Yeah, I mean, we talk a lot about the stock market, the world does, but the bond market is bigger. The people, there's more money seeking stable, low returns. They actually don't want the volatility, and to me, that's ridiculous. I mean, it's about total return. It's about purchasing power going up. And for me, also, it's partially about ideology as well. So I don't want to be funding debt. I don't want to be funding governments or corporations I don't believe in or anything like that. So I think there'll be an ecosystem that develops around Bitcoin harvesting the long-term upside potential and paying off a stable return for the people that want that. That's what STRC does, right? And I think that Bitcoin is going to just constantly change until it becomes the unit of account and backs everything. Yeah. So right now, as it is, if it continues kind of performing how it is, hopefully maybe a little bit better, get some more attention for that, it will absorb capital from the traders that seek additional volatility because it's the stable side of their portfolio. When MSTR and Metaplanet and all of these other companies were what all Bitcoiners were talking about, they were saying, well, the part of my portfolio that lets me sleep at night is my Bitcoin, right? So the Bitcoin was their stable coin almost, like not really, but it was like the stable part of their portfolio. Now, a lot of those traders probably end up with less capital over time, but eventually that capital proportionally goes towards Bitcoin. And the bonds or the people seeking lower volatility, they end up purchasing Bitcoin maybe through an intermediary, like, MSTR is purchasing it on their behalf and spitting out a stable return instead of the Bitcoin return. So they end up creating more capital pushed into Bitcoin at a certain point. That's just where Bitcoin is now. But I kind of subscribe more to the idea of it being an S curve than a stock to flow model or a power law or something like that. I think that there's going to be a point where it's really obvious. There's a boiling point and it's really obvious, and it needs to be massively repriced because it's at the moment where it makes sense to do that based on the rest of the world's understanding of this asset. So with that happen, that's what causes the S curve adoption or S curve price appreciation based on that. But when that happens, I have no idea. And even if you just look at Bitcoin without the S curve, it's like you have to have, or the major upside is like 10 or 12 days a year. And you're not going to time those days, so you have to hold it to see those up days anyway. So it's the same thing. I'm just seeing it over like decades with the S curve adoption idea that I have. You just have to hold it to see that happen.